Welcome. It's the Close the Deal show. I'm your host. Every week we bring you business information, tips, and insights from entrepreneurs, business professionals, and inspired individuals from San Francisco Bay Area and beyond. The Close the Deal show also features public announcements, Entrepreneur Week, and small businesses. And if you're looking for strategies to help you win business or educate the public, then you're in the right place. Thank you, ladies and gentlemen, for joining us today on the Close the Deal show. Who is Jason Matthews? Jason Matthews is the president and CEO of Financial Insurance Solutions. Jason Matthews is also the president of the Urban Financial Service Coalition. Jason Matthews is also a contributor to the Observer and the Think Advisory. Jason Matthews in 2009 decided to create his own business. And in doing so, he's been in the financial industry since 2009 and has learned how to share his information and his knowledge as well as his insights. So today, ladies and gentlemen, on the Close the Deal show, I would like to introduce you to Jason Matthews.
Thank you, Terrence.
Pleasure in having you.
Definitely. I'm excited to be here today.
I'm excited for you to share this book, The Age of Self-Reliance. What does that mean?
So the age of self-reliance means that this is a period of time like no other time in the 20th century where we have to take personal responsibility for ourselves, our family, and our community like no other times before. Oftentimes in the past, our parents might have had pensions or government programs to take care of them. But the age of self-reliance is saying we have to those programs are no longer going to be there like they used to. And this is a period of time where we're going to have to rely on ourselves like no other times before. So that's where I came up with the title for the age of self-reliance.
So what can the average person learn from this book?
So the average person can learn from this book a couple of things. One thing is going to help them recognize what is happening in our current economy right now. Right now, I'm here in the Bay Area. In Oakland, you see teachers are striking. We've seen it in L.A. We're hearing about cuts in benefits and pensions. So one thing this book can do is help you understand that there's going to be cuts in benefits with Social Security and recognize those things and not just listen to regular politics. But more importantly, this book is going to teach you how to properly prepare, not just for yourself, but your family, for not just for the next year or two, but for the next generations going forward on how we can properly prepare our family for we don't just survive the next downturn, but also blossom and take full advantage of those times.
What are some of the tangible ways people can save money that your book is talking about?
A couple of things. So one thing right now is tax time. A lot of Americans, half Americans, are getting some type of tax return. So with that being said, is instead of spending that money on vacation or anything else and forgetting about the downturns we had in '08 or in 2000, is to start learning how to save your tax return money. Number two, the thing is the book teaches you about how you save first. So every time you get paid, how you automatically put money away. And also certain things that you should consider with your family and for yourself. So instead of relying on Social Security for retirement, recognizing that might not be Social Security, so to show you different proper ways to save when there's no longer Social Security or cuts and benefits for your Social Security or pension. Yesterday, I had a friend send me an article from Antioch, California, talking about how Antioch has over $100 million liability due to their pension and healthcare liabilities. So this book tells you, with those type of situations, how much is the proper amount of money you should save, where you should put the money that you should be saving at, and what to look for when the downturn happens, so you can look for opportunities within the marketplace, either real estate, stock market, commodities market, or any other market going forth.
How did you manage to start a firm in the Great Recession where you're able to basically get through what some people wasn't able to get through during that recession? Talking about financial collapse, some people were recovering. Please, how were you able to get through that process and start your own business?
So no problem. So in that period of time, I was with New York Life starting in 2004, and what happened was I had a good clients, and I decided I wanted to get better opportunities and those times and what helped me survive then and start my business. One is I got myself self-educated on what's happening in the economy. Number two, learn how to take advantage of certain markets. Number three is leave a faith in having a good base and group of people around me who can give me insight and knowledge on what I should do for as my business. And all the other things that kind of as far as markets and things, I start recognizing where those opportunities lie. So if you was a person in 2009, 2010 when there's blood in the streets and you had cash, you was able to buy things pennies on the dollar while other people were struggling and were losing their homes, who lost their jobs, and not just lost their jobs, they lost jobs that they would never get the same amount of income as they were before. Perfect example of that, look at Numi. If you remember, Numi was in Fremont, and a lot of people work at the auto plant where Toyota and General Motors were. They shut down. Even though Tesla's there now, Tesla only 10 to the size of employees they had then. And people there without a college education can make $100,000 a year. A lot of people at Tesla are now making $16, $17, $18 an hour. So this book tells you how to recognize opportunities and prepare doing different strategies. And that's what I learned. That's what I incorporate in this book. And those strategies help me survive in my business through networking, marketing, developing different strategies for that, but also having the knowledge and expertise when it comes to saving and investing in the proper planning that people need to take place.
So through your education, what was the first step in your finance industry learning that you had to be able to figure out in order to prepare yourself in the position you're in today?
First thing is, and this is for everybody, is how to properly save. I think, and a lot of people do not know how to properly save. And the way that I figured that out was, hey, I need to put away a certain amount of money no matter what every single time I get paid. And not just put the money in a savings account where that's next to my checking account, but put that money in a savings account where I don't see it. Either at a credit union that's down the road a little bit further, where it takes me a while to get there, but that might automatically get there. Maybe it's an internet account where I transfer those funds and I don't see it. I think that was the first step for me, is recognizing that I need to save money for a rainy day. Because as any business knows, there's always business cycles of ups and downs. So you might have a big client or a big contract or a big deal, but you got to prepare yourself for those downturns so it doesn't take you out of business and knock you out the game.
So when you say downturns, have you ever experienced a downturn?
Oh wait, so I remember 08. I remember in 2008. I remember it quite well. In 08, I remember my mother. She worked at a company for 30 years and she lost her job, where she was an auditor for doing Medicare for Medi-Cal, and she lost her job. I remember my uncle worked at Numi and he lost it. I remember seeing people where they thought about what they should do with their money and lost half their portfolio within a week. So I remember having one client who, or a potential client, who's thinking, hey, I have 500,000. I think the market might bounce back. And then a week later, they only had about $250,000 to $200,000 worth of funds. So I remember that. I remember seeing Wachovia, Washington Mutual closing the doors, Bear Stearns. So I remember those times quite well, and seeing the chaos that happened there before. And I truly believe that our government kicked the can on what happened. And I think the next time is going to be worse than we had in 08.
So if you had the opportunity to sit with a group of people and explain to them how to manage their money, what specific group would that be in order for people to want to learn and get more of reading The Age of Self-Reliance?
So a couple of things. I think we had a group of people. One thing is not just learn how to save, but one thing I recommend people to do within a group is put together an investment club. Find out which one of your friends. I think oftentimes, let me step back. We have casual, fun conversations with our friends, but we do not have deep financial talks with our friends and families. I think one thing is we have to start having financial talks with our friends and family on work about how we save together, invest, and see opportunities. Where one person might see something and we help grow and invest that. At the same time, we also have to think about not just the saving and investing part, but what happens when our parents get older? Do we have a proper trust? Do we have a proper will? If our parents get sick, who's going to take care of them? Where's going to be the financial cost and obligation? How is that going to hurt our family legacy and generational money for the next 10, 20, 30, 40 years? And it can be depleted, all the hard work that our parents put into it.
So when you say all the hard work, when you see people working paycheck to paycheck, How do you address those people who ideally, right, don't have the finance money that you have learned how to save? How do you educate them on it?
I think right now, especially here in the Bay Area in California, we do in the stagnant wage over the last 20 or 30 years. I think this is the time where people have to do two things. Either we have to start cutting back and bearing ourselves to the bone, maybe not going out to eat so much, buying frivolous things and being more conservative, getting off of cutting off Comcast and everything. And some people might not be able to do that, but if you can, you should look at your budget and figure out what your needs and wants are, and really compare that and figure that out. But and then some people, what you're gonna have to do is figure out a side hustle, a side business, an entrepreneur. Maybe we start getting roommates in our house. But some of us have to figure out how can we generate an additional amount of income before we can put that money away. I think oftentimes we got caught up in the American dream trap. Where we bought a house, had our kids in that house, and we lived by ourselves in our own family. But I truly believe that we're going back to how it was in the early 1900s, where people lived together underneath one roof, multiple families. People had one or two jobs. Generational housing is starting to happen where you live back with your grandmother, your dad, and everybody live in one house, and everybody chips in. At the same time, when that happens, then we can save and buy things on our own. So we have to really go back to how it was in the 1930s, where people were savers and saved and lived below their means. And at the same time, they had multiple hustles going on, or jobs, or had a cupcaking business, a DJing business. Maybe they drove Uber at night. You had to do different things to survive. The support they needed because they had multiple generations in that house taking care of themselves and their kids.
So why do you believe there's a financial storm coming?
Couple things. If you look at our, there's a couple things. If you look at pension, tsunami.com, it talks about every day about tons of articles there. Also, if you look at the U.S. debt, you know how much in the United States. The biggest crisis we have in the world right now is aging. Here's the reason why. What people don't realize with aging is you had a young worker who lived all their lives, and which we call baby boomers. Now those baby boomers are starting to retire. With them, they're taking pensions, Social Security, and having government programs. At the same time, they're withdrawing from the system instead of putting money back in. And with that, since they're getting older, and older people don't buy the latest Jordans or fashion stuff, the economy naturally slows down, and recessions happen. And then, with that being said, it makes it harder for economies. Nobody has to figure out how to keep economy growing like we did in the 90s. So I truly believe that's going to happen before I think we get fixed away, because the same powers that be that made the last financial crisis are still here, and they have not, and we just kicked the can on how we truly fix the problem. And Americans haven't learned because our debt levels, student loans, household income debt has drastically increased, and along with our corporate and state and local government deficits that we have.
So what do you think are some of the biggest financial mistakes for the average person?
Average person, not living below their means. That's the thing. We have things that we do that we shouldn't. Either we go out to eat too much, we go too much shopping. We don't tell people no for that. I think that's one biggest thing. Also, the number two thing is we don't stick to the fundamentals. I see when it comes to money, the key is to be great at blocking and tackling, just like in football, which means you have to have your basic fundamentals down. I think oftentimes we see these sexy products out there and investments instead of having a found basic fundamentals of the game. And if we stick to those fundamentals, we have success. The greater savers of the United States are people who was born in the 1930s. They were savers. And they're the ones that had 80% of all the wealth in the United States. While the generation after that, baby boomers were the worst savers. But yet they like sexy products and ideas to get rich quick. If we look at how to build wealth, it is a slow, tedious process. It's like being playing football. You're handing off to your running back, and you're going, and you're handing them off. And every once in a while, you might see a bomb of a play where you can throw it over the quarterback head and get an easy 20 or 30-yard gain. But the way to do that is we have to stick to the fundamentals. I need to make sure I have proper savings. I need to make sure I have proper life insurance, disability, proper health care, because the number one reason is for health care. But if we don't have those things, why are we talking about the sexy things that if we do get rich, great, but the chances are you don't have the education knowledge for it, and also you can't sustain yourself. So the first time your car breaks down, water heater breaks, you're going to take that money from that investment. And all your investments, usually you need a 7 to 10 year time horizon. And if you don't have that, you'll be the first time something happens, you're going to take that money out of that investment, take a loss, and then you'll be wondering.
Well, how do you explain that to someone who's making not minimum wage, not financial, minimum wage?
So minimum wage is going to be hard. I think one thing is you have to, when it comes to minimum wage, I always tell people you want to still put away 10% automatically every time you get paid. Have money come out 10%. At the same time, you need to educate or figure out a way to increase your income. I think that's one thing nobody talks about is how do we increase our income in America? American income's been stagnant for the last 30 years. So you're going to have to figure out creative ways using your talents and gifts to figure out how can I increase my income so once I increase my income, I can put more money away. And because minimum wage was never designed to be a permanent fix in America. It was supposed to be temporary. So we have to figure out use the talents we have, which way we can be educated so we can get ourselves out of being minimum wage. It's going to be even harder. Powers to be do not wages. How can we generate breadwinner jobs? And that's something we're not talking about in America. So you as an individual, why I call this the age of self-reliance, you have to rely on yourself to figure out how to generate more income so you could put more money away.
So would that benefit someone like who's in the process of going to get a student loan?
Probably. From that degree, right? I think oftentimes people go to school and degrees that they will never be able to pay for. There was a report this week talking about the number of people over 65 who still have student loans. So I don't know if you're going to talk to this what's the rate of return for that student loan I'm going to get? How can I get from the job you want to do will not pay for that student loan. So you have to make a decision saying, am I okay with that? Will this system never allow me to, this loan will never allow me to be able to purchase a home, or purchase a home, or live how we do it. And we start looking at the student loan as an investment in ourselves and understanding once we get out of college, what opportunity we have with that degree or major we have.
So what amazes me is the fact that you've taken the time out within your own self to learn how the system works in order for you to be able to know how to deal with whatever crisis come about, you'll be fully prepared. So the age of Reliance is all about being prepared for what? You said a financial storm, an unusual situation.
Correct.
Now, here it is right now. You've came through this process, right? What would you advise someone to look at in your book, right, to pay very close attention to, because you just mentioned that if someone is about to get a student loan, right, don't do it because it's one of the biggest debt problems in America, okay? So what would you suggest to someone to look at that they can learn from your book that may fit them?
Perfect. When you start your career, unfortunately, the book I'm trying to give my clients is how much money should I put in my 401k plan? Where should I put it somewhere else? So this book will tell you how much I should put in my 401k plan, how much money I should put in my savings, and then also how much money I should put in other vehicles. So this book tells you different avenues to help you prepare for increase in taxes to pay for this deficit. Inside the book, it would help you increase on what to look for when a downturn happens. So if a downturn happens, how do you see the opportunities? Because the opportunities always happen in the streets. Look at the Great Depression. We've seen people made in the Great Depression and before then in America due to people opportunities being taken full advantage of those. And that's what this book is right here tells you those opportunities. Also in the book, which is really good, is that it tells you not just the opportunity that you'll see, but it tells you the cost of
Where could people get this book at?
You can put the book on Amazon.com. It was where you can pick it up. Once again, The Age of Self-Reliance.
Well, Mr. Matthews, I want to thank you for coming on today's show.
Thank
It was
you.
a pleasure in having you.
Appreciate it.
Ladies and gentlemen, before we close this deal, we would love to hear from you, as well as if you're interested in learning social media marketing, please contact Karma Bennett here at BAVC Studios in San Francisco, California. If you have suggestions, questions, or even want to apply to be on the Close the Deal show, go to www.theclosethedealshow. Take good care, everyone, and don't forget, find the right connection and close the deal.